Hello and welcome to this week's financial market review. Last week, a new group of apprentice financial wizards tried to challenge some of the big American investment funds by betting against them. While they were successful in doing so for some small caps, it is altogether a different story for more liquid stocks. However, this movement, if it were to gain momentum, could further destabilize the system by causing a tightening of the legislation surrounding short selling and thus liquidity on the markets. For the time being, there is nothing to worry about, but stimulated by their little achievements, this group could attract other followers. Apart from last week's cold snap, which has raised the spectrum of 2000 once again, the Biden plan may take some time to be validated in view of the current disagreements. The Republicans are offering only about $600 billion, less than the third of what Biden wants. The resumption of talks this week could force the president to push the plans through without getting the opposition's endorsement. While there is need to ensure that economic momentum is maintained, it is quite likely that the cash payment will be used for investment purposes and not in the real economy, thus inflating further the bubble. Another important element of the week is the private employment figures and the expected stable US employment rate. This seems surprising, given that each week in January witnessed new claims for unemployment benefits exceeding 750,000 people. This is a real test for the monetary policy after the last Fed president announced a possible 5% growth in the US this year, bringing the unemployment rate down to 4.5% by the end of the year. A potentially bad figure should fuel the feeling that the Fed will have to do more and consequently benefiting equities. Stay tuned for our next roundup, and until then, have a nice week ahead.